For a long-drawn process, Jan 6th today marks the record date for ITC Hotels Demerger. This was announced in July 2023 and the restructuring will see ITC retain a 40% stake in its hotel business with the remaining 60% directly held by shareholders through a rights entitlement. Shareholders will receive one ITC Hotels share for every 10 ITC shares that they own as of Friday, Jan the 3rd. Joining me on the show today is Andrew Holland. Andrew Holland, welcome back to News9 Live. Happy New Year to you. Good to have you back. Help us understand ITC demerger in the making for a long time. Finally, 2025 is upon us. Today, Jan 6th is the record date for the demerger. What does this mean for ITC?
So good morning, and I wish you and the team and all the viewers a very happy New Year, a very prosperous New Year. I think rather than I think this has been known for a long time, about the demerger. So I don't think there's anything new there to my mind. But what I find interesting is that in the years gone by, many years now, when you look at the results of ITC, the hotel part of the business has always been so small. It didn't really you didn't really focus your attention towards it. So now I think with this demerger and listing, maybe a more focus now can be on the hotel side of the business. And of course, it will be good for the cash flow of ITC as an overall holding company, to continue to build on its kind of retail and food and beverage businesses. So, I think it focuses attention now on two sides of ITC in terms of the hotel standalone, which is great news. And of course, we like that sector. It's something we talked about many times, that we like the hospitality. We think people are going to continue to travel and want experiences. And having stayed in many ITC hotels, that they're one of the leaders in the country. So I think this is a good news in terms of for both sets of the companies, ITC and the hotel business.
And Andrew, what does this mean for shareholders that own ITC in their portfolio at present? I believe for every 10 shares that they hold, they will be allotted one ITC Hotels share. So in the medium to long term, what does this mean for shareholders of ITC?
Well, it means you've got two, you're holding a new business which is separated out in terms of the hotel business. And as I said, the prospects for the industry overall, look very, very strong in terms of people continuing to travel, and the good news in terms of what could be extra revenue for these hotel businesses is that foreign travelers have yet to kind of pick up in terms of travel to India. It's still pre-COVID levels. So if that was to happen, and that's one of the focuses of the government too, then this would be, would help both the top line, but more importantly, the bottom line. So I think, the next 2 to 3 years for the industry is very strong. So, as a holder of a hotel company, whether it's ITC Hotels or whatever, I would think that this is a good growth story to be holding on to.
Right, a good growth story, especially for the next 2 years or so. Hold on is the word coming in from Andrew Holland. Andrew, let's move on to another story. And this comes by way of FDI inflows into India. Well, foreign direct investment inflows into India are witnessing a major surge, with investors from the Middle East, Japan, European Union and the US recognizing India as a prime investment destination. Well, this according to Commerce and Industry Minister Piyush Goyal, who says that this growth is driving rapid economic expansion and generating millions of jobs. Well, just look at some data. According to the minister, India is averaging over $4.5 billion in monthly FDI investment inflows since Jan last year, despite global uncertainties and challenges. In the Jan to September 2024 period, FDI rose by about 42% to $42.13 billion against less than $30 billion in 2023. Andrew, FDI inflow into India, this is something that the government has been pushing for, has been wanting, and the numbers for 2024 looking fairly robust, especially as compared to the year-ago period. What really is working for India? And with the onset of budget in less than a month from now, what should India do to further strengthen FDI inflows coming in?
Yeah, I think the reason there's many reasons for FDI inflow. I mean, the kind of China plus one or India standing out because of security of products or services has helped India. But I think the one thing that we kind of I think we should really focus on is two things. One is that India is growing at one of the fastest rates of globally, and therefore with the young population, the consumption growth in India is going to continue to grow many folds over the next 5 to 10 years compared to any one country. So if you just think about, I'm going to invest in India, because of the demographic, dividend that we do have, and also, per capita GDP moving from 2,500, say, to 10,000 over the next 3 to 5 years, there's an explosion of spending that's going to happen. So you get the benefits of being in India. And then for some companies, if you go to, let's say, semiconductors or electronic manufacturing, you have the domestic market as well as the export market to look forward to going forward. So if I was at any company in the world, I'm sure the board room, members would be saying, listen, we've just seen Hyundai Motors list on the Indian market, and it's a large percentage of the holding company's own listing in Korea. And therefore, it's not just the potential of earning money within India. If you want to get a listing going forward, and that would help your own market capitalization in your country as well if you were listed. So many ways to kind of put the positive here. But yes, I think foreign direct investment is something India definitely needs. And if it continues at this pace, then that's great for not just the economy, but jobs as well. And it has a multiplier effect across many different industries. So that would be something that you would want to continue to see rising.
Right. Of course, as we want to see FDI rising, there is a dichotomy that you see in FPIs, Andrew. Foreign portfolio investors have pulled out close to 4,285 crore rupees from Indian equities in just the first 3 trading days in the month of Jan this year. And this is reflecting a cautionary stance ahead of the Q3 earnings and concerns over valuations. Now, this FPI story marks a sharp contrast to the net inflow of 15,446 crore rupees seen in December 2023. Now, add to this the US Fed Reserve's decision to reduce rate cuts in 2024 has further failed to improve investor outlook. So, Andrew, there is this dichotomy, FDI story really shining, money directly coming into Indian businesses, but the FPI seem to be a little cautious and a little jittery. How do you explain this dichotomy?
Well, I think foreign direct investment is really building a business, over the longer term to capture the economic growth of India. For foreign investors, portfolio investors, there's other markets they can look at. It's not just India in terms of the short to the longer term as well. So what I think is happening at the moment is that if you're an emerging market investor, you're probably just going to sit on your hands for at least another 14, 15 days. Let President-elect Trump come into office and see what those policies would be and how it would affect the region overall, particularly China. Where the tariff expectations are running quite high. Now, if it's any less than that, that could be good for emerging markets. But I think most foreign investors say, we'll just sit on the sidelines, wait to see what happens, see how this policy plays out. Is it going to be exactly as the market is expecting, or could it be different? So I think, that's where we are globally. I think locally, yes, you're right. We've got results season coming, and I think TCS is the first one of the big IT companies on the 9th of January. And they're after the budget. So you've got a few positives that could play out locally as well. But all eyes is on the US, because if it's bad news in terms of tariffs, then that narrative around America first, only buy America, bond yields there at 4.6, you might as well be there, right? You don't need to take any risk elsewhere in the world. So I think unless that narrative changes, then emerging markets, particularly given the dollar strength, are going to remain under pressure. And that's probably why you're seeing foreign investors, continue to be lukewarm not towards just India, but I think globally in terms of emerging markets.
Right. So is it fair to assume, like you mentioned, this could very well just be a temporary blip, just caution being exercised by foreign investors, and they're waiting for Trump to actually take office and get on with whatever decision he has to take on tariffs, and that will decide and define the future course of FPI inflows, not just in India, but in all emerging markets, Andrew?
Yeah, I mean, let's give an example, and this is why it's fraught with kind of danger in saying this is exactly what's going to happen. But let's just say the tariffs in China were at a 30%, not 50%. This could be seen very positively, in the China context. So therefore, flows towards China through emerging markets would start to increase, and India would gather some of that because of its own weightage. But it would take that relief away from emerging markets in terms of the possible high tariffs that were there, and if China was then to do a stimulus, to kind of go along with that, then the whole region could be in favor. Now, I said, China and other markets are quite a lot cheaper than India in terms of valuation, so India might garner some of that, but the sentiment would change, and I think that's the key. Is the sentiment towards emerging markets would change for the better in terms of that things aren't going to be as bad as initially everyone's thinking at the moment.
Right. Well, you had mentioned previously, Andrew, about the strong dollar, and I want to now shift focus to the RBI's constant endeavor to keep the rupee from sliding, and despite that, the rupee continues to slide. In fact, the forex cash available at the RBI has now dipped to an 8-month low of just $640 billion as of December 27th. Now, this again is as per the data from the RBI, and the reserve saw a decrease of $4 billion during the week, following a cumulative decline of about $13.7 billion over 3 weeks. Now, is the RBI right in selling dollars and intervening in forex operations to really try and keep the rupee stable, or should the rupee find its real value no matter how much it intends to slide down by?
Yeah, it's a tricky one to answer actually, because I think all central banks would like to see a stable currency. Some mild depreciation is fine, but nothing too untoward or has anyone panicking, and I think that's the case here. So I've nothing against what the RBI is doing. I think they've over the years, I think you've seen that currency depreciation. Whilst you have some sharp moves at in some years, I think the depreciation on average has been something like 3-4% over the last 10, 15 years. So it's not a sharp move upwards or downwards that you're seeing with the rupee, apart from occasional years. So I think just keeping that stability, I think, gives investors confidence that they're not going to be hit by a currency depreciation. But of course, one of the things we talked about just previously was that if you expect currencies, and not just India's, but emerging market currencies to depreciate, that obviously means that you're going to lose money as well as a foreign investor. So again, it all stems back to what will Trump's policies be, and how will that affect emerging markets and currencies. So one of the things that we're just focusing on at the moment, to try and give us a clue of what these policies might be, were bond yields in the US and currencies in terms of how's the dollar performing. And at the moment it's near 109, so that's telling you that it's still America first is where people are putting their bets at the moment.
All right, so what I'm hearing all the last 15 minutes or so, Andrew, is that all eyes are on Donald Trump, and that is pretty much going to define the future of practically everything, from the strengthening of the dollar to FPIs coming into emerging markets, including India and China. And one more aspect of the Donald Trump presidency is going to be the influence of Elon Musk, who, among other businesses, also happens to own Tesla. And how this tariff war is going to play out for the electric vehicle industry in the world is another story that we will be waiting and watching and looking out for in the coming weeks and months. But staying with the electric vehicle story, Andrew, I want to bring some data up on the screen, and this is about the India EV industry, which has now finally achieved its best ever annual retail sales in the last year, CY 2024, registering a total of just short of 2 million electric vehicles sold. In fact, 1.95 million electric vehicles were sold, registering a growth of almost 27% year on year. Now, this EV story is something which has again been something which the government has focused on, Andrew, all year long. In fact, for the last many years now, the push has been to somehow achieve that 30% of electric vehicles by the year 2030. But we haven't really seen this take off, and despite the 27% rise year on year, we are talking about a low base effect, and we're still nowhere close to the 2 million milestone when it comes to EV sales. So what do you make of the year ahead 2025 with respect to electric vehicles? Is that something which is on your radar? And again, is there going to be Trumponomics and Elon Musk which will again decide whether the world will move to EVs or not?
See, I think EVs, not just in India, I think EVs globally have, apart from China, actually, have been, suffering. Particularly in Europe, it's been a slowing in terms of the progress has been slowing. I think in India, that the way I think about the overall kind of market, including EVs, is that it's hugely competitive and it's pretty cutthroat at the moment. So I'm not sure which one is going to be the winner. I mean, in terms of the one that kind of is it a Maruti which has huge market share in the future, or is the leadership going to change over time? So the way I would look to play it is probably through the component makers, because they will be supplying all of these car makers. So I'm not saying I'm skeptical. I just think it's a hugely competitive market, and I think this will keep margins under pressure for some time until you, as you rightly say, see this kind of real big push towards growth of EVs. And I think it's going to take some time, to be honest.
All right. Well, we'll leave it at that. Andrew Holland, thank you so much for taking time out this Monday morning and joining us right here on Morning Brief at 9. Pleasure having you with us.
Thank you. My pleasure too. Thank you.